Another half hour of analysis, insights on Business Incorporated live on Channels Television. Here's what's coming up. World's largest shipping company, Maersk, prepares to return to Red Sea under the U.S.-led protection. And in the initial 9 months of 2023, Egypt's exports dropped 22% year-on-year. Plus, the IMF has given its approval for the disbursement of $620.65 million in budgetary support to East Africa community countries. Hello, welcome to the program. I'm Ladi Williams. Merry Christmas to you and yours today, and definitely most markets that we track right here are closed for the holidays, but we still have some markets that are not sleeping at this time. Talking about the Middle Eastern markets now, we see the sentiments there's quite mixed there. We've seen the UAE. Abu Dhabi index is down 0.12%. Trading today. Dubai index, that's down about 0.27% at 4,000 points. But we see it's more green right there in other markets we track in the Middle East. Saudi Arabia up about 1%, 0.97%. While the Qatari index up 0.5% at 10,452 points. So we see it's mixed sentiments right there in the Middle East. Now let's get a check on what's happening in Europe now. See, Iran over the weekend rejected claims that it was deeply involved in the Houthi attacks on ships entering the Red Sea. Meanwhile, problems in the area have forced a growing number of freighters to reroute. We'll see Lars Holten now gives us some details right now. Great to have you, Lars. So what is the current situation in the Red Sea?
Thanks for having me, Ladi. Yes, it's not very Christmassy over there, with the Houthi rebel group in Yemen attacking ships as they enter the Red Sea through the narrow Bab al-Mandab Strait. More and more shipping companies have now rerouted their vessels, and that is not as easy as it sounds. On average, ships from Asian ports are looking at a 17-day journey to Europe if they pass through the Red Sea and the Suez Canal, as opposed to over 40 days when going around the Cape of Good Hope. It's just such a long trip to make. It's increasing costs tremendously. Now, the U.S. has put together an international coalition to protect ships in the area from attacks, and they have intercepted and shot down a few drones as well, but it's still too risky for many companies to take that journey now. So Maersk, Hapag-Lloyd, MSC, and many other giants of the business have rerouted their ships, and that of course takes more time, more manpower, more fuel, the latter being a major factor. One industry analyst says for one of those giant freight vessels, the added cost for fuel when going around Africa adds up to an extra $1 million. Of course, that is cost the shipping companies can pass on to customers, but that doesn't solve the problem. It rather moves it from one company's balance sheet over to becoming a general inflation issue.
Well, but even going around Africa seems to be kind of problematic. Tell us about that.
Indeed, the problem is that ports along the way are completely overwhelmed with the extra traffic they're seeing due to all these ships being rerouted. As I just mentioned, for the longer journey, ships need to restock and refuel, and that's not at all easy. We're talking millions of gallons of shipping diesel, and you have to have infrastructure in place to even deliver that. Now, the biggest ports along the new route would be the South African ports of Durban and Cape Town, and those are among the worst performing ports in the world, according to business analysts. I've read an interview with one shipping consultant who said that even with the state Durban is in now, it is still the most advanced and largest port in Africa. So ships rerouting around the continent there have very limited choices. Among those choices are the deep water ports in Mombasa in Kenya and in Dar es Salaam in Tanzania. But those two are apparently ill-equipped to handle the expected traffic over the next couple of weeks. So what started out as an inconvenience in a matter of ships taking longer routes does seem to develop into a situation where we might see some major supply chain interruptions later on.
All right, Lars, so what investors are looking at in this holiday shortened week?
Well, most markets are closed today, of course. It's Christmas, and that has Wall Street closed, as well as all the financial markets in Europe. Most of them actually will remain closed tomorrow as well. That doesn't mean, of course, that nothing is happening at all. We are expecting a few numbers for the Christmas shopping season. Checking some headlines, business wasn't very strong in the month of December, leading up to the big day. Retail revenues might have been up 1.5% over last year, but mostly that is due to higher prices. Taking that factor out of the equation shows that the Christmas shopping business shrank by around 5%. But let's see what we'll hear about that last-minute buying. Also, we're looking at Asia, of course, where markets are open, and they've started the week off with some modest gains.
I guess Asia not looking back this holiday. Definitely. Thank you so much, Lars Holter, there, giving us the details right there from Berlin. Let's get a check on another market that's not sleeping at this time. Talking about the crypto market, we see Bitcoin attempted a fresh increase above the 43,500 resistance zone, but it climbed above that 44,000 level before that. But the bears were active near the 44,300. They're sending Bitcoin down to the $43,175 level, down 0.99% at this trading hour. There we see Ethereum, that's holding on $2,276, down 0.57%. So we're seeing a lot of sell pressure right there in the market, in the crypto market. BNB, we see profit taking with that. That's down 1.23%. So that's how the market is looking in crypto space. And we see some Cardano down 0.68%. XRP was trading in the green earlier this morning, and we're still seeing more gains there for XRP. It's up about 3% right now. So we're seeing the crypto market still trading with traders there still trying to book some profit right there in that market. Well, let's get a sense of all the stories now. We see as Nigerians join the rest of the world in celebrating Christmas. Retailers in the country say the amount of spending carried out by consumers has reduced when compared to the Yuletide celebration recorded in recent years. The chairman of a Buy More group of companies, Mr. Dominic Essien, who was a guest on Business Morning earlier today, attributed the decline in consumer spending to the impact of exchange rates, scale of preference, as well as the state of the economy. Take a listen.
That we just continue with the basket sales so that people can at their convenient pick and choose whatever they want and then sell and send to their people. The sales of hampers has really reduced in our stores, and the sales of the gifting has also reduced. And again, that's because of the nature of the economy this year. We think that consumer spending will reduce when the data comes, that if it increases for any reason, it will be marginal. People now realize that, the exchange rates are really, really high, and so they cannot afford some of the things that they used. But even us as retailers, if you realize that most of the suppliers credit that people used to offer no longer exist, because when you get a credit today, when you're paying back, the exchange rate has moved. So literally the person offering you credit is in a lost position, so we don't get that. But in terms of taste, people are beginning to migrate and see what alternative do we have in the market to cover up for, mention some of those quality drinks, branded drinks, carbonated drinks. We have alternative here. Mention some of those rice products. People try to tweak, and some of those foreign products have been substituted seriously here. But significant part of minute part of the consumers still want to, mix and match some of the foreign and local together, but people are changing to local product.
Yeah, definitely. With the cost of living crisis right now, it's expected that some consumers will be subdued, at this time. Might not see the same spending we saw last year, but we'll definitely be looking out for that data. And definitely inflation last year was much different from the inflation that we have at this period. Well, we see pharmaceutical companies in the country have asked the federal government to address the issue of a forex funding gap, which is a major challenge for the industry. The national chairman of the Association of Community Pharmacists in the country, Mr. Adewale, who made this known on our Business Morning program, he called for an exit plan of regulatory authorities that will allow a smooth departure of foreign pharma companies from the country. Take a listen.
Government is not looking at the fundamentals. The starch that we are using in the country is imported, but we have cassava starch, we have corn starch, but we cannot transit it to the pharmaceutical grade. What stops government from bridging that and say, look, let's focus on this particular one, because the starch goes into most of the tablets that we are using, and even the capsules. So why can't we focus on that particular one, get it right, make sure that we reduce the amount of forex that we need to import starch. So when you are looking at this issue, you look at the regulatory problem, manufacturing problem, the business decisions. So you can't stop a businessman from saying, I'm out of business, I'm leaving your country. But that business entity must have an exit plan, which our regulatory authority failed to demand. What's your exit plan? What level of stock are you holding now? So that we know that within 3 months, we will exhaust the stock you are holding, and then we'll be able to bridge that gap by accelerating registration for other individuals who are interested in those molecules.
Yeah, that was an earlier conversation right there on Business Morning. Definitely, we've seen pharmaceutical inflation really high. Cost of medicines, essential medicines, really gone up, some about 100% year to date at this point compared to last year. Well, we'll look at Maersk now. We see the world's second largest container line has announced plans to resume shipping through the Red Sea. This decision is attributed to the establishment of a new multinational maritime task force aimed at safeguarding vessels from potential attacks by Houthi rebels from Yemen. In a recent advisory, the company stated that they're currently working on plans that for the first vessels to make the transit, and for this to happen as soon as operationally possible. The company emphasized the paramount importance of ensuring the safety of its employees, making it the #1 priority in addressing the challenging situation in the Red Sea Gulf area. This announcement follows the company's earlier statement just 2 days ago, where it anticipated ongoing chaos in the Red Sea due to drone attacks and expected the challenges to persist in the coming months. We'll take a break now. When we come back, we'll get a sense of the recent CBN lifting restrictions on banks to carry out crypto transactions for crypto entities. We'll find out the details after the break. Do stay with us. Welcome back. Well, the Central Bank of Nigeria has lifted the ban on transactions in cryptocurrencies, saying that banks and other financial institutions in the country can now provide services to cryptocurrency exchanges and dealers, also known as virtual asset providers, as VAPs. Let's get a sense on how this will impact Nigeria's financial system. Join us now is Stanley Onwara, banker and financial inclusion champion. Great to have you on the show. Merry Christmas.
Good to be here, Laddie. Good afternoon, everyone.
Fantastic.
Merry Christmas.
Merry Christmas. So break it down for us. How do you see this, impacting the P2P market in Nigeria? Because we know that when this ban was placed, most of the transactions moved to peer-to-peer. How do you see that impacting the market? And do you see most of these crypto companies coming back and fully bringing the business as it was before the ban?
Yes, I don't see a shift in the P2P market in the short term, but in the mid to long term, you hope to see a lot more decentralization because people are already used to trading in the P2P market. Now, what we expect to see in most of the companies that shut down and moved elsewhere, some have already indicated interest in coming back into the country to come and acquire the license and follow the due process because they can open bank accounts and they can trade and it can be truly licensed. So we hope to see a lot more investment in that sector, owing to the fact that Nigerians are some of the highest traders of cryptocurrencies in the world. And so it's a positive development.
And definitely, how do you see Nigerians interacting with the cryptocurrency market at this time, with this announcement? Because we know definitely a lot of Nigerians are afraid of getting their accounts flagged. If there was any in the description area if there was any crypto-related, word there. How do you see, Nigerians now interacting with crypto with this?
Well, Nigerians are, like I mentioned, we are top 3 in the world in the use of digital currencies. And I would like to, there's almost a shift from crypto being cryptic, from the sense of, people not having access to it being a bit more anonymous, to having KYC details being provided. Now, before you sign onto exchanges like Binance, you need to have either your NIN or your BVN attached to your account. So there is full KYC now, and you can be traced. So it has taken away that factor of who is this person that I'm trading with, or who is this person that this currency is being transferred to. And that's one of the directives that the CBN and the SEC had come into play to enable regulation on digital assets. And I see Nigerians taking this because they're already active on the space. And if they continue as forerunners, we hope to see a lot more capital come into Nigeria, which is a positive development in the long run.
And definitely, with the crypto market, it's all about regulation at this point. In all of 2023 is all about regulation, and the expectation is that will go into 2024. But talk to us about what the Securities and Exchange Commission, how they play, what role they're going to play in this market. And I know they did release some guidelines, before. What are you expecting from the SEC at this point?
So if you read the regulation that was brought out by SEC, they had modalities both for digital assets operators, people that are going to offer the services, both custodians of tokens. They have different regulations for them, from your risk management down to your corporate governance, down to how you constitute your board. All these are supposed to keep the investor to be able to protect from the investor side, because what we saw a lot in the crypto space at the early stage was that a group of people could come out and have initial coin offerings, just like we have IPOs, and in a few months they disappear with some of those funds. And there weren't proper documentation, there weren't proper KYC done on not just the individuals, but on the board of those constituting some of these companies. But now what the SEC has done, you're going to see a lot more regulation. When you want to come in, there are modalities for you to follow, which are clear-cut for you to follow. And it's amazing what the SEC did. And the CBN is riding both on that and what the Financial Action Task Force did on regulating, on bringing out modalities and regulations for this. So it's a combination of what SEC has done, what the Financial Task Force has done, and CBN now riding on that to say, okay, you know what? If you're going to come into the digital, you're going to provide digital currencies, you're going to provide digital assets to Nigerians, it's a modality for you to follow. It's no longer banned. Come in, do your business, but just follow the guidelines and to keep Nigerians safe from being scammed or anyone losing their money.
Right. And what are you saying for taxes, when it comes to crypto traders, crypto exchanges? Do you think we're going to have, they're going to get into that tax web, going forward in Nigeria?
That's actually, to me, is one of the main aim of this, because if you have people trading in millions of dollars on any market and you do not have an oversight of it, it means that you have a loophole in revenue. So it means that there is a possibility, this is a business, as long as you can regulate it, as long as you can get it legitimately being authorized by the relevant authorities like we have now, you can tax it. So if an exchange is coming into Nigeria and they're declaring profit of, say, $1 million at the end of the month, it means they have done business with Nigerians and they have earned revenue and they can bring it back. But before now, we didn't have that. So it's kudos to the think tanks that have brought this up. It's another stream of revenue for the government and an initiative for the people of Nigeria to get into the digital space.
Yeah, because we know some of those crypto traders make really, really good profit, when the market smiles at them. But let's look at another issue now. We see Nigerian banks, some top Nigerian banks are collaborating to create and oversee a new stable coins. I guess it's tagged the CNGN. Tell us how this is different from the e-Naira.
So the CNGN is a lot different from the e-naira in the sense that they say it's a substitute for the e-naira. The e-naira is not active on the blockchain in the sense that you can't use it. So what happens with stable coins is that you can trade stable coins, you can convert stable coins into any form of digital currency. But we don't have that with the e-naira. But this is going to be interoperable between different chains. So for someone that wants to buy, for example, Bitcoins, and you have the CNGN, you can easily convert that into your Ethereum, your Solana, or your Bitcoins, or whatever currency. We didn't have that with the e-naira. And the CBN has clearly stated that it is not a replacement of the e-naira, it's just a substitute. And until they come out with modalities, or if there are other methods of what they want to do with the e-naira, because the capabilities of the CNGN are not the capabilities of the e-naira. The e-naira has broader capabilities in the sense that it could be used for government interventions and other things that the government can that wants to do for the citizens. Unlike what this consortium is coming up with stablecoin. So there are two different capabilities.
I guess we have a lot to look out for in 2024, looking at the crypto space in Nigeria, especially with the stable coin, the CNGN. Thank you so much for coming on, Stanley Onora, banker, financial inclusion champion. Thank you for sharing your Christmas with us.
Thank you. It's amazing to have everyone. So Merry Christmas. Exciting times ahead in 2024.
Exciting times ahead. Thank you so much. All right, now let's get a sense of what's happening in North Africa now. So we're seeing the initial 9 months of 2023. Egypt witnessed a notable 22% year-on-year drop in exports, totaling about $30.8 billion, according to data unveiled by the Central Agency for Public Mobilization and Statistics, that's CAPMAS. Simultaneously, imports exhibited a 21% year-on-year decrease, settling at $58.5 billion from January through September. Consequently, the trade deficit in Egypt saw a significant contraction of approximately 20% year-on-year, reaching $27.7 billion within a January to September timeframe. This contrasts with the positive trajectory seen in 2022, where Egypt's exports surged by 19.4%, reaching $52.1 billion, which marked an increase from $43.6 billion recorded in 2021. And to East Africa now, the Board of International Monetary Fund have given its approval for the disbursement of $620.65 million in budgetary support to Rwanda, Tanzania, and Democratic Republic of Congo. This allocation is part of the $1.92 billion financing commitments made by the Washington-based institution to 6 East African nations over the past 6 months. This financial assistance provides a welcome relief for these 6 countries, including Somalia, Burundi, and Kenya, all grappling with mounting debts exacerbated by challenges such as dwindling revenue collections, diminishing foreign exchange reserves, and currency depreciation. The IMF funding is contingent upon the recipient countries implementing crucial socioeconomic and governance reforms. The primary objective is to assist these nations to addressing persistent budget deficits and bolstering their declining foreign exchange reserves. And Nigeria Civil Aviation Authorities issued a directive to airlines urging compliance with the Nigeria Civil Aviation Regulations 2023 Part 19. This entails providing refreshments and implementing alternative measures in cases of flight delays and cancellations. Mr. Michael Chimabru, the Director of Public Affairs and Consumer Protection, expressed the NCAA's acknowledgement of recent disruptions in flight, extended empathy to all affected passengers, recognizing the inconveniences experienced over the past few days. He highlighted that the NCAA has mandated airlines to keep passengers promptly informed about any flight disruptions, and this initiative aims to empower travelers to make well-informed decisions regarding their travel plans. Well, that's the show today. Thank you for watching. Don't forget you can get more details on www.channelstv.com. All right, so it's a holiday. Go out there, have fun, eat all the chicken. Wishing you a very Merry Christmas right here. Thank you for watching. I'm Ladi Williams. Bye for now.